Traders, to a new session of charting across the board. Briefly to jump here into the new variables presented across the indices, Bitcoin, and the crude for today. We are looking at the price action on the S&P 500, where previously we're looking for potentially a similar pattern such as the Nasdaq that broke its previous low from June. However, the S&P 500 did not manage to break below. Buyers stepped in near the previous low at the 0.886, okay? Therefore, the argument for the butterfly, such as the Nasdaq, did not manifest, where the Nasdaq managed to print a new low than the previous low and bounce between the 1.72 and the 1.41 fib extension from these previous lows to the highs. In the case of the S&P 500, we found support at the 0.886 retracement from the lows to the highs without printing a new low. Therefore, my argument will now deviate back into the previous idea for what was then a pending deep crab pattern at these lows. Because remember, we have the previous drawdown, then the support, and the argument was if we are constructing the CD from this low, okay, not from this one, then we will be looking at the 1.618 fib extension. However, if we adapt to new information, okay, assuming now this is the C point, can that still be the case? I would think so, as long as we reject at the 1.618 between 7,900 and overspill to 8,000 will be obviously to the 1.90. The 1.90 is a complementary ratio of the deep crab pattern for the 1.618 if that were to be the case. Will I go short blindly at those levels? Not necessarily. I would like to see a rejection first, then a retest as a lower high on the daily. This, if that's the case, we can assume that a lower high may be printed on the momentum indicators, strengthening the argument for a lower risk execution if we print the 1.618 and reject first at those levels, okay? As of now, I don't have any edge on the structure rather than sitting on the sidelines and wait until the pattern presents itself. As I mentioned before, I was looking, given the price reaction on the Nasdaq, since the Nasdaq printed a butterfly giving the lows to the highs, then a B point at the 0.786, I was then looking for a similar pattern, given that these two instruments present the similar readings. However, major fake out on the S&P 500, buyers defended the 0.886 at the 7,300 region and majorly bounce from those levels. So as of now, all I can monitor is the pending bearish deep crab pattern on the daily, okay? On the 4 hour, it's also worth mentioning that we are testing the 1.13 of a shark pattern, potentially also exceeding the 2 to 4 between the complementary ratios for this pattern. The bearish shark pattern, yeah, way above the 1.13 for the shark. But if we compute those ratios, we can assume that this might be the case for a 2 to 4 between the legs B, this one, the B, and the last leg of the move. Let's see. 1.618, yeah, the 2 to 4. Right at the 2 to 4. Can this turn into a bullish 5-0 now? Meaning a correction, ideally, based on the book. That will be the case if we're going to reach the levels for the pending PRC on the deep crab pattern. Support at the 0.50 and the 0.618 where the gap was formed. Can that be the case, my friends? It's been extremely difficult to trade this range, especially on diamond patterns, based on the fake out they present. Okay, so therefore, as of now, executing here at these levels could be the case. Okay, could be the case, but it depends on other variables such as The momentum indicator on the 4-hour is entering overvalue conditions. Doesn't mean we cannot go much higher. Why? Because on the daily time frame, there might be more room. Entering that bullish territory at the 60 range, okay? Therefore, the daily can potentially still present more upward traction. But again, on the 4-hour, we're entering that exhaustion, or not exhaustion, but overvalue conditions, okay? That could be the case on the 4-hour as well as extreme overvalue conditions on the hourly time frame, okay? Trying to execute at current levels can be complex, but let's monitor the next 4-hour candle in 37 minutes plus other arguments. As of now, all I can see is a daily may present more upward traction if we bring the deep crab pattern into the 7,900 and 8,000 region. Okay, having a hard time to read the numbers here. The next chart, Bitcoin. Is Bitcoin printing something on the weekly, given the price behavior on the S&P 500? This is a burning pattern. Also in Elliott wave, we're looking at the room potentially for an ending triangle. Based on harmonic patterns, I'm debating whether Bitcoin will manifest into another fake out also, such as the indices, and bring something larger, such as a cipher. All right, computing the highs, the lows, back to the highs. Is Bitcoin going to bring this fake out into the 78, into the 0.786, 89,000? Fake out in a sense that this may be a fake out into the lows. Okay, hard to read, my friends, but giving the previous weekly time frame also, because remember, we are also retesting the previous lows from February at the 0.786, where the pattern first created the reactive move on the cipher, pierced below, and tested the 0.886. Now, are buyers going to recapture the 0.886? If that were to be the case, my friends, then I would assume that there might be an argument for a retest into the 80s, 70s. Okay, very complex structure across the board, but this is the reading that I can still observe as of now, as long as buyers are defending the 0.886. They have an argument for recapturing the 0.886 as resistance or as support, back into support, and maybe work on a cipher pattern. Okay, if that were to be the case, into the 89 to the 0.886, obviously 93,000. Previously, the argument was as long as we not break below the C leg, maybe a Garley. However, Garley and cipher present similar ratios. Where they differ is at the C point. So therefore, maybe there could be a possibility for a pending berry cipher to be retested in the 89 to 90,000 region. Moving briefly back into oil, crude. This is also another important formation. Why? On the daily, we printed the Garley pattern at the 0.786, 67 bucks, bounced majorly, nearly 40%, okay, 39%, rejected. Zooming into the 4-hour, are we now constructing the type 2 return? Type 1 came on the daily as a first reactive move into the 67, okay? So there can be an argument indeed that this reaction at the 0.786, another test potentially into the 72s or 70 bucks region, can be regarded as a type 2 return of the daily time frame. Okay, a major pattern. We find support here. We can compute all the other harmonic ratios from the highs to the lows, back to the highs, back to the lows, and maybe another CD. But I don't want to assume that can be the case as long as the pattern presents itself on the 4-hour, finds support, and therefore a lower risk may be presented. In conjunction with S&P 500, if the crude presents support, I would then look at the inverse correlation between the crude and the indices, mainly the S&P, where if we bring the pending bearish deep crab pattern, okay, into the 7,900 or 8,000, that can be a lower risk potentially either for a short on the indices and a long on the crude, okay? Bitcoin, as long as prices remain below, we're at resistance into the 65. We recapture 65. It can be an argument for the buyers to push the prices higher, okay? I'll keep you posted into the next stream. And let's monitor this chart cautiously. There is some buying pressure occurring across the board. Therefore, let's see what Bitcoin and the indices will bring next. I'll see you guys into the next one. Cheers.